What if I told you that skipping one takeout meal a week could be the key to replacing your 9-to-5 income? Sounds too good to be true, right? But here's the reality. You don't need a fortune to start building wealth. In fact, with just $50 a week, less than the cost of a daily latte, you can invest in 3 dividend stocks that could eventually surpass your full-time job income. Imagine this. While you're sleeping, working, or even vacationing, these stocks are quietly working for you, paying you thousands of dollars every month. No more stressing about bills, no more living paycheck to paycheck. Just steady, reliable income that grows over time. In this script, I'll reveal 3 dividend stocks that can turn your 50 weekly investment into a life-changing passive income stream. I'm talking about stocks that pay over $5,000, $7,000, and even $9,000 in monthly dividends. By the end, you'll see how one of these stocks could grow to a valuation of over $2 million and pay you over $9,000 every single month. This isn't about getting rich overnight. It's about making smart, consistent investments that compound over time. Whether you're looking to cover your basic expenses or achieve financial freedom, these stocks can help you get there. Let's dive in and explore how you can turn $50 a week into a fortune. Stock number 1, Morgan Stanley, MS, the financial powerhouse. Topping our list is Morgan Stanley, MS, one of the world's most recognizable names in investment banking and financial services. Founded in 1935, the company has grown into a global powerhouse, managing billions in assets, underwriting massive deals, and helping both institutional and retail investors grow their wealth. Morgan Stanley's business thrives on advisory services, capital markets, and wealth management, which generate stable revenue streams even in economic downturns. The company has been paying dividends for 27 consecutive years and offers a current dividend yield of 2.7%, backed by a dividend growth rate of 16.89% and an average share price appreciation of 14.01%. The $50 plan with Morgan Stanley. Here's how a $50 weekly investment in Morgan Stanley would grow over time. After 1 year, your investment would accumulate to $2,600. After 5 years, your portfolio would be valued at $18,200. After 10 years, your investment would grow to $58,800. After 30 years, your portfolio would reach $2 million, $267,735, with yearly dividends of $15,995, about $9,600 per month. The total value added to this portfolio would be $2,189,735, with $1,579,236 coming from stock appreciation and $610,500 from reinvested dividends. Stock number 2, Lowe's Companies, LOW, the home improvement powerhouse. At number 2, we have Lowe's Companies, LOW, a staple in the home improvement retail sector. Lowe's provides everything from tools to appliances and competes directly with giants like Home Depot. Founded in 1946 and headquartered in Mooresville, North Carolina, Lowe's has grown into one of the largest retailers in its industry, with a market capitalization of $144.35 billion. Lowe's stands out for its strong fundamentals, consistent dividend growth, and impressive capital appreciation over time. The company currently offers a dividend yield of 1.79%, with a dividend growth rate of 17.99% over the past 5 years. The stock also boasts an average annual return of 13.78% in share price growth. Lowe's payout ratio is 38.07%, which is sustainable and shows the company's commitment to rewarding shareholders while maintaining financial flexibility. The $50 plan with Lowe's. Here's how a $50 weekly investment in Lowe's would grow over time. After 5 years, your investment would grow to $133,000. After 10 years, your portfolio would be valued at $552,027. After 30 years, Lowe's would become a true wealth generator, valued at $1,889,169, AYING. Asterisk, asterisk, $1,889,169, asterisk, asterisk, paying asterisk, asterisk, $93,940 in annual dividends, about $7,777 per month. The total value added to your portfolio would be $1,811,169, with $1,334,720 coming from capital appreciation and $476,500 from reinvested dividends. Stock number 3, NetEase, NTES, the tech giant with steady dividends. At number 3, we have NetEase, NTES, a tech giant that might not be the first name that comes to mind when talking about dividend growth, but it's becoming a powerhouse for investors focused on capital appreciation and passive income. NetEase is known for its diverse portfolio of successful online games, including Fantasy Westward Journey and Identity V, as well as its partnerships with international gaming companies like Blizzard Entertainment. The company's strong presence in gaming has pushed its revenue and net income growth over the past 5 years, with an average annual revenue growth of 15.66%. On the dividend front, NetEase offers a forward dividend yield of 2.36%, which is a compelling factor for dividend-seeking investors. Over the past 3 years, the company has increased its dividend by 43.64%. despite its relatively low payout ratio of just 7.22%. This commitment to dividend growth signals financial stability and a promising future for shareholders. Looking at its stock performance, NetEase has shown a strong growth trajectory, with a 5-year return of 68.3% and a 10-year return of 424.10%. The company's potential for future growth is significant, especially as China's online entertainment market continues to expand. The $50 plan with NetEase. Let's say you invest $50 a week into NetEase. Here's how it looks over time. After 1 year, your investment would accumulate to around $2,600. After 5 years, this investment would grow to $18,750. After 10 years, your portfolio would be valued at $52,800. After 20 years, your investment would reach $2,491,853, HYEARLYDIVIDENDINCOMEOF. $2,491,853, with yearly dividend income of $7,931, about $591 per month. When you combine reinvested dividends and capital appreciation, the total value added to this portfolio is $2,413,853. For anyone earning around $5,000 per month from their job, this stock has the potential to completely replace that income in the long run. The power of a diversified portfolio. While each of these stocks is strong on its own, the real magic happens when you combine them into a diversified portfolio. By averaging the dividend yields, growth rates, and share price appreciation of NetEase, Lowe's, and Morgan Stanley, you can create a portfolio with a current dividend yield of 2.28%, an average dividend growth rate of 14.39%, an average share price appreciation of 14.6%. The $50 plan with a diversified portfolio. Here's how a $50 weekly investment in this portfolio would grow over time. After 5 years, your portfolio would grow to $18,200. After 10 years, your portfolio would reach $596,100. After 30 years, your portfolio would be valued at $2,193,200,000. $258,000, a YING, $293,258, paying $92,700 annually in dividends, about $7,726 per month. The total value added to this portfolio would be $2,115,258, with $1,694,630 coming from stock appreciation and $495,500 from reinvested dividends. Investing just $50 a week into these 3 dividend stocks, NetEase, Lowe's, and Morgan Stanley, can help you build a portfolio that surpasses your full-time job income. Whether you're looking to cover your basic expenses or achieve financial freedom, these stocks offer a reliable path to passive income. Remember, the key to success is consistency and patience. Start small, stay disciplined, and let the power of compounding work in your favor. If you found this breakdown helpful, hit the like button, share this video with someone who needs to see it, and don't forget to subscribe to the channel for more tips on building wealth and creating passive income streams. Let's grow together. Your financial freedom starts now.